Okay, so basically what I'm going to be doing is I'm going to be breaking down the way that I have been able to scalp using ICC on basically the 5 minute and the 1 minute time frame. I know that ICC, Sci, the way he teaches it, he's a swing trader. Um, I'm not a swing trader, not yet. So I've been able to take what he has learned and apply it to like a microscopic level to be able to scalp using ICC. And so this is how I've been doing it. I'm constantly, what is it called? I'm still figuring it out. It's worked so far, but every time I get on the charts, there's something new that I learn. And so every day I'm trying to better my system, but right now this is what I have. And so why not share it with you guys to see if it helps you guys in any way. Um, but like I said, this isn't how my system will be forever or anything. This is just what it is right now. And so, um, yeah, let me show you guys what I've learned by watching Trades By Sci on YouTube. So, the first thing that you want to know, right, that he teaches is number one, what is the trend? And that is one of the most important things that you're going to want to know before you even start trading. And not just that, but you're going to want to know what part of the trend are we on, right? So, this is where things as a scalper, I've noticed that some things you got to take and some things you got to just, um, it doesn't apply to you yet. Not that it doesn't apply at all, but because you're not swing trading, it doesn't apply to you yet. So, yes, you want to know what the trend is and you want to know what part of the trend you're on, but as a scalper, you will sometimes trade against the trend. Um, and it's good to know what trend you're on because that tells you what trend you're not. And so, if that makes sense, because let's say you want to go in and out of the market, but the daily time frame is saying, like right now, we're on a bullish trend. Let's say that you're on the 5 minute trying to find a scalp or a 1 minute, and you're taking a short. Why? Because market structure was telling you to take a short, and that's against the overall trend of the daily time frame. But because what we're going to talk about and everything, you're able to go against the trend. So it's good to know what trend, like what is the overall trend, so that you know what you're also not on. I don't know if that makes sense. I don't know. Okay, and also like what part of the trend are we on. Let's say if you're on the continuation, then you know you're not on the correction or the indication or anything like that. Or if you're on the correction, you know it's not the continuation. So it's good to know. Um, it's good to know, and it's good to also not know. I don't know. I don't know. Take it as you will. But right here, let's just figure out really quick what the trend is on the daily time frame. That's going to be our strongest level as day traders, intraday scalpers. As swing traders, you can use the weekly, the monthly, and all of that. Um, that's just too much information for us day traders. And yes, you can go and get even more confirmation that you're on a bullish trend, but the daily time frame is more than enough for us right now. So let's use it. So let's start from there. The daily time frame. We can see that from the highest point, we went and we created a low. And then we created a higher low. My bad. We created a lower high because this high is lower than this. And then we created a lower low because this low is lower than this. And then we created another lower high because this low is lower than this. And then we failed to create a lower low, right? So we were building bearish structure until here. We wanted to see some more lower lows and lower highs being created if it was a true downtrend, but price failed to do that, right? So instead, what did price do now? So we created those lows. Let me just draw that again. Lower high, failed to create that lower low. Instead, what did price do? It said, I'm breaking this high, and I'm going to make an indication that I want to go bullish. And so it created a higher low. A higher high, because this high is higher than this high. And then it created a higher low, because this low is higher than this one. And what does that tell you? Where do you see bullish structure? Where do you see bullish? Where do you start to, you see higher highs and higher lows in bullish structure. So what are we expecting to see again? A high that's going to break this one, right? Because that's going to be a higher high. That's going to continue our bullish structure. And what did we see? We saw a higher high. And then we want to see another higher low. And what did we get? We got a higher low because this low higher than this one, right? And so if we want to continue that, what do we got to do? Again, break this high, continue to make that high, right? What did we do? Broke this high, created another higher high. Now, you know that price is going to go for that higher low if we want to continue that bullish market structure, right? And so what does that mean? That we can't go past this low, because then that would be breaking market structure. So what happens? Price will not break market structure unless it's reversing, right? Why is this true? Because we saw it right here. We had market structure being built, and then it broke because price decided to reverse, right? So we know this is true. So if you want to continue to see that bullish momentum, could I delete I can't. Okay, if we want to continue to see those higher highs and those higher lows being built, we have a higher high. We know what comes after that is a higher low. So we want to see that higher low being built, right? And then we want to see this high right here get broken and continue to make that market structure until we can break this one, and then continue to make all-time highs until price breaks and it goes for either correction or a reversal, right? But that's why we want to see it on the daily time frame. Even though we're going to be on the 5 minute or the 1 minute, we still want to know what the trend is so that we know what the trend isn't. I don't know. Just write that down. You want to know what it is so that on the 5 minute and the 1 minute, you know, it'll make more sense, actually. Let me just shut up. Okay. So price is not going to break until we're breaking market structure, right? All right. So right here, we have this high that was broken, right? So this high right here was broken. So this is the high that we care about. Yes, all of this is important over here. All of this information is important, but this is the most recent information. And as day traders, scalpers, we care about the most recent information, right? So this high broke and it created an indication. So let me show you guys what that looks like. This is your indication, right? Okay. And so now you know what the trend is. So on the daily time frame, actually let's separate it. On the daily, your bias is daily bias. It's bullish. And what part of the trend are we on? So we can say status for daily. And we seem to be on the indication, right? So I'm just going to leave it at that. And I know that that's in the back of my mind, but I'm not necessarily going to use it. So now I can go down to a lower time frame and start zooming in more and more on just the past few days, because that's really what I care about. Okay, actually, let me go back for a few seconds to the daily to explain to you guys why I also marked this level, right? Because I know that if we pass, where is it? Okay, so this high is important to me because this is where the indication broke, right? And so I know that anything below this level is going to sell because it's sold before. And so I could even write below, sellers below, right? And so I also know that since this is the daily time frame and this is a daily level, that if a price breaks this level, then this is an alert to me where I don't want to see price break this level, because then it'll start reversing. Does that make sense? Like, I don't want price to go below this level, because then that'll be breaking bullish structure. And then that would be my bearish indication that price is going to reverse. And remember, this is the daily time frame. So that would be a whole trend reversal, because why? Price would not break market structure unless it's reversing. And this is the daily time frame, not the 1 hour, not the 15-minute, not the 4 hour. This is the daily time frame, the one that tells you what trend I'm on. What is the strongest trend for day traders is the daily time frame. I don't know, you're not called 5-minute traders, you're called day traders. So take that into consideration. But yeah, this is my level right here that I would pay attention to if price would go near here, because I want price to correct. And if it corrects down to here, great. Let me actually show you. I want price to correct down to at least this indication level where it broke out from. And that'd be great, because you can start taking longs again here, blah, 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 blah. We'll get into that. But if price starts to break this level and starts to create lower highs and lower lows, and it's building bearish market structure, then you don't want to be in longs. And that tells you what trend you're on. So anyway, yeah, that's why I marked that level out, because this one's going to break market structure. And then I know that right here, this is where the indication came from. And so that's, I want to know that. But price, another thing, why don't I have this level right here marked up the entire time? Because price is all the way up here. Why would I mark something, like, why would I, like, I obviously have lows here, right? I have a low here. I have a low here. My bad. A low here. I have a tiny little high here. I have all of that, right? Why would I care about what's all the way down here or here when price is all the way up here? Until price starts to near these levels, then okay, go back and start marking your levels. But that's why you guys have too much stuff on your screen, is because you have everything marked out and you're not realizing that price is all the way up to here and your levels are like 20 of them are marked down below. Just have like 3-4 lines, 5 max. Like, we'll see how many lines we have at the end of this. I don't know, but yeah, that's the only level I would mark on the daily time frame, right? Because that's where the indication came from. All right, so let's go down to the 4-hour level, and like I said, let's zoom into the most recent days, because we only care about the most recent days. Day traders, right, guys? Not week traders, not month traders. Those are the swing traders. All right, so right here we can see that indication, this right here is a daily level, So we know that if we broke this level up here, there was going to be buyers. And if we break below it, we're going to have sellers. See, because price has resistance here, sellers, resistance here, sellers, resistance here, sellers, breaks resistance, buyers. And then now we're up at these levels, we're above this level. So sellers below, and then actually up here, let's put buyers above, because why not? It helps to know. Buyers above. And that is way too big. Okay. So right here on the 4 hour time frame, time went all the way up to here. Oh, I forgot to explain why I mark the... Okay, so if you notice, I'm using lines and I'm marking the candle body closes. Why am I marking that? Short answer is because market structure is made out of the body candles, not the wicks. The wicks are information. The wicks will tell you where price explored, but it won't tell you where price closed at. And so market structure is made out of where price closed at, not where price explored. And the simplest way that you can figure that out also is if you go to your line chart. Let's mark our levels first and then do the line chart, so I could show you exactly. It's the same exact thing. That market structure is created out of the body candles, and that's why I mark the bodies of the candles and not like the wicks. And also the reason I don't use boxes, literally just aesthetics. I don't like the way it looks. I know that price is gonna go up to here. I don't need to mark it in a box. I can just know that, okay, above the line, buyers, below the line, sellers. I don't need to mark a box or anything. I know that it may be useful, but to me, I just like the way it looks visually, and it's strictly an aesthetic thing. I could be wrong. I probably should be using boxes, but I haven't had an issue with it so far, and I like the way it looks, so I'm going to continue to use lines. So right here, this is our highest point on the 4 hour, and so we had a low right here, our lowest point at that. And then, right, so my bad, this had a indication corrected all the way down to this level. If we were going to continue this bullish trend, right, we would have to had broken that high and then more bullish structure, right? But it didn't happen. So now you start to take into consideration what is going on with this trend. So we know that on the daily time frame it looks bullish, right? But this 4 hour is giving you bearish. What does that mean? Well, you know that in a bullish trend, and let's write this down. In a bullish trend, the correction equals bearish, because it's always going to be the opposite of what it is, right? And in a bearish trend, the correction equals bullish. And this is just more information to help us know how we're going to be trading. Remember, we haven't even traded yet. We're still analyzing this. Usually it doesn't take super long. You can just immediately come into the charts and you'll be able to recognize it the better you get at it. But I'm just breaking it down as slowly as possible, also for me, so I can look back on this because I just want to. Okay, so from this point, we know that if price was going to continue on that bullish trend, we were going to have to break this high right there, because that was the most recent high that price had made. And we were going to have to continue to make those higher highs, higher lows, a higher high, and a higher low, and so on, because that's what trends do. Trends continue. But we didn't see that, right? Instead, we saw that price went from this point all the way back to this level, but it didn't quite break that high. It kind of made a tinier little high below it, right? Just right below that high. And then we broke this low and we created a lower low and then a lower high and then a higher low right now. And so price is kind of in the middle, kind of deciding where to go, in between a high and a low. But this right here, this logic applies to every time frame, right? So now, just because we know that the daily time frame is on a bullish trend, we can treat, okay, me personally, the way I do it is I treat like every time frame like if it were the daily time frame, because this logic, I apply it to every single time frame, right? So on the 4 hour time frame, it's not going to be breaking structure unless something is happening, right? So right here, this is interesting to me, and so I um, mark this low right here. So this is why I would mark this low, right? Because this is the low that was broken, and price made an indication right here towards the downside, and it's nowhere we haven't been before, because look at this wick. It's below that level, and that's where price, went exploring again, but it didn't feel comfortable to close over there, so that's why we marked out the body of the candle, and then price went back and it explored. So this is your indication. So now we can start to see kind of bearish market structure in the market. I mean, not in the market, on the 4 hour time frame. And so we're just taking these things into consideration. So hold on, let me actually, this white will mean that it's the 4 hour, and then I'll also write it down because I like to also visualize it like this. There's nothing wrong with visualizing things and writing them down, right? But yeah, these are our 4 hour levels. And then again, this green one is our daily level, so let's expand it just a little bit so we can see. Oh, we'll just write daily next to it. That's our daily level. So we know that if we break below this level, then prices, market structure is breaking on a higher time frame. So if we're below this level right here, then price is going to be breaking market structure on the daily time frame, right? So that's the only reason why we have that level marked out. And then right here, same thing. We're treating this the 4 hour time frame like if it were the daily time frame. We're seeing that if price breaks this low right here, there's going to be what? Sellers below, sellers below, sellers below, sellers below. And if price breaks up here, price is above this level, buyers above, buyers above, buyers above, buyers above, right? Same logic applied to this daily. Buyers above on this level, buyers above, buyers above, buyers above. It's just apply the same logic to every time frame and you'll be all right. Okay? Okay. So now that we know that the 4 hour is bearish, we can write that down also. But these are just things that we know. Keep in mind that the higher the time frame you are, the longer the time it's going to take for your trade to execute. And so the shorter the time frame that you're on, the shorter amount of time that your trade needs to execute. So that's why us day traders focus more on the 1 hour and then taking entries on the 5 minute and the 1 minute, as scalpers, I mean, versus somebody who's going to be using ICC to trade exactly the way Sci does. They're going to be focusing on exactly what we just practiced, the daily and the 4 hour, and then they're going to be taking their entries based off the 1 hour, the 15 minute. But we're just doing exactly what they do and scaling it down. we're just doing exactly what they do, and we're scaling it down to the shorter time frames so that we can get in and out quickly, so that we're able to eventually get to that level to be able to swing trade and hold these levels. I mean, hold these trades for days and weeks. So anyway, now we have our 4 hour levels, 4 hour level marked, and then I think honestly the last level that I would mark on my 4 hour right here would probably be this one, because price is closer to this level. And so this level would just be interesting to me because I can just see that above it price sells, right? And so even these wicks are telling me that price sells above it. It just isn't comfortable closing above it at that time. So it might go back and explore it. It might not. These wicks might just be rejections, but this level is interesting to me, so I would mark it. So, all right. Now we know that. Now we know all of that. We can, oh yeah, we said we were going to write that down, so let's write that down. So on the 4 hour, our bias is bearish. Okay. And then the status is right here, where this is the indication, right? So this one was the indication. So this is the correction. So right now, we're still correcting until price goes back bearish. So we are correcting. Correction. Anyway. Yeah, so we have our daily trend, our daily bias, and then we have our 4 hour bias. And why that's useful as ICC, you can stop right here and, now you know how to swing trade, because the reason why you want to know why your 4 hour is, why your daily is bullish but your 4 hour is bearish, because that just means that the daily is correcting, and once the 4 hour turns bullish, once it starts making bullish market structure like this, so this is creating a higher high, a higher low. This is a lower high, but because this is lower than this, but it created a higher low because this low is higher than this. So this is kind of undecisive behavior. This is price would either have to break this high and continue to make bullish structure to then tell you, hey, I'm back on my I'm back on my I'm back on my I'm back on my bull I'm back on my bullish trend, and I'm gonna continue bullish. So then you can enter, scale down to your 15-minute, your 1 hour, or whatever, and then enter and then hold for your daily levels to be creating higher highs and higher lows, because now on the daily level your higher low has been created and you're on that way to continue to create your higher high. So that, if you wanted to stop the video right there, that's how you know now how to enter with ICC as a swing, or not even as a swing, but like to catch that trend, to catch that bullish trend again. But as a scalper, you don't really take the daily or the 4 hour trend into consideration. It's mostly the 1 hour, and we'll get into that. But I wanted to show you guys how we can't, even as scalpers, apply ICC methods and into the lower time frame until you do your higher time frame analysis, because the higher time frame is always going to take control, and it's good to know what's going on overall, so that you know where price is going to react strongly. But on the lower time frames, you are now able to apply the same logic of this price will not break market structure until it's reversing, only because you already did your higher time frame analysis, and we'll do that right now. We'll get into that right now, the lower time frame. But yeah, this is what we would have to see in order to now go on the daily time frame, find an entry, and then you had that low created. Basically, that'd be the low that price created. Why does it look like that? And then you continued up, and then you'd catch that trade up until price breaks either this level, or continues and continues. But anyway, that's not what this video is about. This video is about how I do it on the 5 and the 1 minute. But I do all of that before I'm able to even go to the 5 and the 1 minute, because you can't find market structure levels on that lower time frame like this. Or anyway, but yeah, this is what the 4-hour time frame. These are the levels I'd mark out, and so yeah, we have a bearish bias for this one, and we're on the correction, right? Because it's still not showing bullish structure. So now what we're gonna do is, let's say we want to now get into a trade, right? So the market's open right now. Hopefully we can get into something right now. But okay. So yeah, like we said, we're going to be using the past few days. And if you see, we can see that the 4-hour levels are showing the same exact levels on the 1 hour. But now we can see what those wicks are made of. So every candle and every wick has internal structure. So the higher time frame you're on, like the more structure is going to be inside that candle once you zoom in. And then once you're on like the 1 minute, I think that's as far as you can go. I don't know. I don't do any of the seconds trading. But obviously there's more candles in the 1 minute and all that. But the 4-hour obviously is going to have 4 1-hour candles. And so as we zoom in, we're going to see where those candles are placed, how they created that 4-hour candle. And right here we can see that wick below that 4-hour level, the wick below, was created because these 1-hour candles right here, that's just how they printed, and that's whatever. There's still going to be more candles in here as we get in further and further time frames, but that's we don't really care about that right now. But anyway, so let's get into a trade, right? Alright, so now that I have all my levels marked out, I want to get into a trade. So let's see. On the 1 hour, I can see that anything below this level decides to sell, right? So this decides to sell, this decides to sell right here. We'll see on the lower time frame what this wick is made out of. Price right here decides to sell, right? So I know that anything below this level is going to sell. And same logic applies to the opposite side, right? So anything above it is going to buy, and it's going to go up. Same thing here, same thing right here, and same thing right here, right? And price just buys above this level. So I like to think of these lines as doors, because you could only go one way. I mean, you can only is it one way? Like, you can only pass through a door one way, right? Like, you could either go in or out. Like, you can't just stand in the middle of the doorway and I'm in both rooms, or I'm here and there. Like, you know what I mean? Like, you either have to pass through the door, or you got to stay in the other side of the door of that room, and that's the same thing that price is doing here. That's why I like the lines and not so much the boxes, because boxes create more of a range, and this creates more of a door, where it's like, okay, you're either down here or you're up there, make your decision. And so to me, this is super helpful to see that, or like super helpful to visualize it that way. So I know that my lines, anything below here sells, right? Below there, it's going to sell. And what did price do? Price went up to this level and it's starting to create a tiny little rejection candle because it's selling. And so it's just, you're either on one side or you're not. Like, you're either, you know what I mean? And so right here, we can see that this candle is created, this candle is the 1 hour candle, right? And we know that there are candles within that candle on the 5 minute and on the 1 minute. So, like, just think about it logically. How many minutes are in 1 hour? 60. So that means there's 60 candles in that one candle right there being formed. There are 60 mini 1 hour candles in here being formed. So just because one candle looks like this doesn't mean, so this is the 1 hour, right? Doesn't mean that the 1 minute or the 5 minute can't be building bearish market structure. And you're telling me you can't catch one of those tiny little rides down following ICC methods, like following ICC, what is it? Fucking, you know what I mean? Like, that's how you're able to scalp ICC, right? So this is the 1 hour. Let's focus on that. Price is rejecting this 4 hour level, which also happens to be a 1 hour level. I'm not going to mark anything out here. Why? I don't need to. I don't want my paper. I don't want my paper. I don't want my notebook. I don't want my freaking chart to look like a notebook paper or anything. So I don't mark anything that's unnecessary. But this is all just me, you know? Like, I've been saying so far, aesthetically, this is the way I like to see my chart. You guys create boxes, you guys create circles, you guys keep the arrows, you guys mark it out, do whatever you want. This is just, I like a clean chart. I don't know why. But yeah, this is basically, let's write this down. 1 hour. I always forget. 1 hour. And this. And this is the 1 minute, right? Oh shit. 1 minute. Minute, because some of y'all will think it's month. Right? So 1 hour structure can look like this, but 1 minute structure can look like this. And you can catch one of these: indication, correction, continuation. How do we see that? Because price is breaking swing lows, and is continuing to build bear structure, right? So right here, it broke this swing low, and it went all the way down here. And then it created a new low. Then it went and corrected, right? Almost back to that indication level. Didn't break that swing high and continued to be bearish. Continued to break that other swing low, right? So it's building bearish market structure on the 1 minute time frame and on the 5 minute time frame, whatever one you like better. But it's like the concept is there. We're just taking it at a microscopic level to be able to, take advantage of ICC and be able to scalp so that we're able to swing in the future. Because, right, that's the goal, to be able to swing trade. You don't want to be on the charts every single day. You don't want to be taking 5, 6, 7 trades. I would honestly recommend just 2, 3 good scalps and you're good. Honestly, one good scalp in the morning, you're out of there. You don't really need all of it, and like, you don't want to be on the charts all day. Like, I don't know, like, me personally, like, I've been on the charts too much recently, and I'm like, ugh, it's like frying my brain, and it just doesn't feel productive after a while to be on there for so long because you're just like wanting and wanting and wanting something, and like maybe it's not like you're wanting something, but you're just like, you need to give yourself a break. And I'm talking to myself like, girl, chill. Like, I don't know. um but yeah, I don't really, the goal is not to be a day trader and to be on the computer as a 9 to 5. You know, the goal is to wake up, market open, you're there for 30 minutes max, probably an hour if it's a really, really good trade, but you want to be there on a scalp like 10, 15 minutes and then get out, right? That's all you want to do, and you want to get on with your day. You don't want to be there continuously with 5, 7, 10. I've seen people do like 30 trades, 20 trades. I don't understand that. Like, I don't get that. I like there's not even 20 trades right here. There's like 4 or 3 or 4. Like, I don't know. I don't know. But anyway, let's try to get into something right now, right? So, let's see. Um this 1 hour rejected that 4 hour level, and then this 1 hour right here is made up of tiny little candles. So let's now jump down to the 5 minute and see what the 5 minute is doing. Why that 1 hour candle is being built as a bearish candle. Let's figure out the structure of it. Let's see what the skeleton of it is, basically. And so now that we have all of our higher time frame levels marked, now that we have all of that biases in the back of our minds and everything, now we can start applying this price will not break market structure and unless it's reversing logic to these lower time frames. So right now we're on the 5 minute time frame. So let's go back and let's put this right here, because we did basically what we did as we analyzed the higher time frame is we did our due diligence or whatever, our analysis or whatnot, right? To be able to unlock this this rule or whatnot, because you can't just get on the 5 minute right here and be like, okay, so let me zoom in right here. All right, so price is making a high right here, a low here, a low. Okay. Price is bullish. Okay. Oh no, it's breaking. Oh no, it's reversing. Like, you can't just get on the 5 minute right there and then and mark those levels, and that's, I don't know. You probably could, but you're not doing your proper analysis, and that's on whoever wants to do it like that. Go ahead and do it. But anyway, now that we have these levels marked out and we know that they're basically the same as the 1 hour, the 4 hour, they're all the same, they're basically the same levels, we can now start marking our 5 minute levels. Because why does that matter now? So our 5 minute levels, if we're going to be entering on the 1 minute and scalping, we are going to be aiming for those 5 minute levels. It's the same thing as marking your levels out on the daily time frame, right? Going down to the 4 hour time frame, entering and letting your swing trade go, right? For hours and hours and hours, or days and days and days. We're just taking that exact same logic now and we're applying it on a tiny little 5 minute scale, right? So that this right here is valid. So we can now start using ICC on the 5 minute chart, because we're going to be entering on the 1 minute chart, right? Okay, so these levels are also going to be targets for us, and also they're going to let us know that, hey, price reacts here on the higher time frame. So if you didn't have these levels, right, if this wasn't here and this wasn't here, and you suddenly just start marking out your levels and price starts to reject right here, and you're wondering why, you're just like, oh well, I guess there's just buyers there. on the 1 minute time frame, or the 5 minute time frame, there's just buyers there. But you could have known that there was buyers there because you had that already marked up. You know what I mean? Like, that's how the higher time frame can still help you out as a scalper, even on the 5 minute, even on the 1 minute, because it's telling you where price is going to react overall. You still care about the overall, even though sometimes you're going to trade against the trend. You want to know where price reacts overall, right? It's just more tools in your pocket. You know what I mean? Like, you can't go wrong with knowing where price reacts on a higher time frame. Like, it's not going to do you any harm. If it doesn't react, it doesn't react. But if it reacts, you know it was going to react, right? So that's just why you can also, that's also how it's helpful and it's useful to have that higher time frame analysis on your chart. So now we're on the 5 minute, right? So now we can start using this same logic as the daily time frame, right? So on the 5 minute time frame, we can see that here today price was bullish, and then it went bearish, and then it kind of just consolidated. And then right now it's kind of making its way back up to these levels, this 4-hour level. It wants to break, but it rejected that level, right? So this is what we're going to focus on right now, because these are our most recent levels. And what I mean levels is I mean swings. So right here, price was bearish, right? Low, lower high, lower low, lower high, lower low, until it broke market structure. Price will not break market structure unless it's reversing. So what did price do? It started getting bullish, right? So right here we have a high and a higher low, because this low is higher than this low. And then we created another mini high and then another mini low, right? Because they're higher than these and higher than this. And then it kept doing the same thing, right? Another high and another higher low. And then it kept repeating, right? All the way up to this level, this 4-hour level. And then price started to break market structure. Why would it do that? Price wouldn't do that unless it's reversing. So now we know that we can look for the opposite of what the trend is. So now that we know what the trend is, we know what the trend shouldn't be, or what the trend isn't, right? So if it's a bullish trend right here, and we're creating higher highs and higher lows, that means if we start to see lower lows and lower highs, right, then that's telling us that, hey, price, you should look for shorts. If you're going to be scalping at this very, very minute, look for shorts. We don't care what the daily time frame is doing. We don't care what the 4-hour time frame, what the 1-hour time frame is doing. We're focused on the 5-minute time frame right now, and the 5-minute time frame right now is telling you to go for a short, right? Because price would not break market structure unless it's reversing. And the way that we know that it's reversing, right, is if it starts to break lows. So we have a low right here, a 5-minute low right here, our most recent low, right? And let's make that one green. You can't even tell it's green. Blue. Alright, so that's our most recent low. And yes, we could use this one too. It's the same exact thing. Because above this level, price is bullish. We have that tiny little wick as an indication right there that price above this level it's bullish. It just didn't feel comfortable closing over there. Same thing above, this little tiny little low right here. This tiny swing, we could mark that level out. If you're like, oh, well, what about this swing? What about, same thing. We know that above it, it's going to sell, but the same thing, it's going to just go right back down. And below it, it's going to sell, right? So we can do that, and we can mark that level because that's the one that it broke. It broke both of these lows. So we know that right here, this is a tiny little indication on the 5-minute time frame that price is going to be bearish, right? Because it broke the swing high, and the swing, it broke a swing low, and it wouldn't do that unless it's reversing. So we have an indication here, right? Same logic applies. Don't trade the indication. Why? Because it's just an indication. It's just telling you, hey, I have potential, but it's not telling you, hey, this is what I'm doing right now. It's just because it still needs to correct. Because it went to go find liquidity, or I don't know. I don't know how to explain all of that, but it created a new low, and so it needed to correct. And it went all the way up to this level. Same thing, if we would have kept our level right there, it's the same thing. It broke that level, corrected all the way to the initial break. So let's keep it right there because that's the most recent low, right? So let's mark this one. This is the most recent low that price broke on the 5-minute time frame and created an indication, right? So I wish I had better text or whatever, but indication, let's just say that means indication. So let's put it below so that you guys can see it. That's the indication. We gave a bearish indication on the 5-minute time frame. So we know that below this tiny little level that the 5-minute time frame created, we're going to want to look for a sell, right? And so right here, same exact thing. Anything below this level, we're marking it out, right? Because we have a tiny little indication. And remember, we're marking the candle body closes because the same logic applies. Market structure is made out of the candle bodies. Let's write that down. Actually, I forgot to write it down earlier. Market structure equals candle body closes. And remember I said I was going to show you guys this line chart. We're marking out our levels, right? And we're going to see that everywhere we mark out is just the same exact way we've been doing it this way. It's a horrible chart right there. But this is how everyone teaches you, right? This is how we all learn. This is how all the videos are showing us. And you mark the levels on those levels. What am I saying right now? You mark the levels right there on the swings, right? On the swing highs, the swing lows. Right here, the swing lows. And that's how everyone teaches you. I like to use the line chart because that is basically telling you what market structure is and what levels you should be marking out. So just those are the levels we've marked out. The candle body closes, right? So this is right here, we mark that out. Right here, we mark this out. So we know that below this level right here, bearish. So anything below this tiny little 5-minute level is going to sell, right? So the same exact thing. So we had a tiny little ICC indication, tiny little correction right here, tiny little correction. So correction, that means correction. And then let's put it in black so we can all see. Yeah, so that was a correction. And then once price reached that level and it failed to go any higher or create any bullish market structure, failed to break this swing high, it just continued down. So we had continuation. So here is a 5-minute continuation. And we know that anything below this level, someone is dying out there. We have a continuation. right? And so that's how you could use, that's how you could use ICC on the 5-minute time frame. But we are going to take it one step further if we wanted to scalp. Hold on. Let me show you guys how you could have entered on the 5-minute before we enter on the 1-minute. Because some of y'all can stop the video after this, and some of y'all can keep going, right? So we had an indication, correction, continuation, right? Where would we have entered for our continuation? Well, let's draw it out, and then let's apply this. Actually, no, don't draw it out. Use your line chart, okay? This is what these are for. Okay, so you have swing low, right there, swing high. And then you have right here, this swing low, broken, created another swing low, right? Okay, we can see bearish structure being formed. Why do we know that that's bearish structure? Because we have lower lows, lower highs, lower lows, lower highs. Let's write that down, because why not? Lower low, right? And then a lower high. A lower high. And then the same thing right here, another lower low and another lower high, right? And so price broke this swing right here. So we had a tiny little swing right there, right? We could have marked this one out, but we can see that clearly there's another level right here. It wasn't significant enough there, so even if you wanted to mark it right there, you could. But like you can kind of see it right there, so let's mark it out, because why not? Let's be precise. But yeah, right here, price made that break, that indication, right? Don't trade the indication. Why don't we trade the indication? Because it can reverse. It can reverse on you, even on the 5-minute, especially on the 5-minute and the 1-minute. So you want to wait for those corrections and those continuations. You're still using ICC logic, right? You're just applying it to now tiny time frames, micro levels. So we have an indication. Price corrects all the way up to this level right here. This is where the initial indication came from. So we know that below this level, price sells. We know that above it, it's going to buy. Why? Because we've seen it. Okay? We're just trading what we see, what price reacts. That's all we're doing. We're not predicting. We're not doing any sort of magic, voodoo, nothing. We're just seeing what price does and seeing if it repeats. If it repeats, we enter. If it doesn't repeat, we still enter, because now we know what it's not going to do. That's all we're doing. That's all we're doing, right? So, price above here buys. Price below here sells. So, if you want to mark it out, let's mark it out. No issue in that. So, above here, we have, above here, we have buyers, right? And then below here, we have sellers. And that's it. You're either on this side of the line or you're on this side of the line. You can't be in between. You can't be halfway in, halfway out. You're either up here or you're either down there. Okay? That's the way I see it. That's the way I interpret it. That's the way it makes sense in my brain. And so I'm just sharing that with you guys. Um, but yeah, where could you have entered? Okay, price didn't go any higher than this. We know that price sells below this level, and so we're going to enter here. Why? Because price broke at this level. Okay? Price broke at this level, and let's delete this level so I'm not confusing anybody. Price sold at this level, went all the way down to here. So when price comes back to this level where it sold from, we just wanted to do the same thing. We just wanted to repeat and actually go further, right? Because in a trend, that's what it's going to do. It's going to continue. Trends continue. Trends, I trends will always continue. Always. That's why it's a trend. Okay? So right here we have a bearish trend. So the 5-minute is bearish. Let's write that down. 5-minute bias equals bearish. Bearish. Now this starts to matter because this is now our entries. Yes, we wrote it down for the daily. Yes, we wrote it down for the 4-hour. I think we wrote it down for the 1-hour. But right now, we don't care. We don't care about them. We care about what the 5-minute is doing because we're going to be in and out in a few minutes. Less than an hour, hopefully. Less than 30 minutes. Less than fucking 15. Right? So now, as I was saying, our 5-minute bias is bearish. So we're looking for sales. We are looking for sales until, guess when? Until we're not. Because we want price to continue. We want the trend to continue. So we want to be continuously looking for sales until price breaks that market structure and it tells us, don't look for any more sales. I'm done. I'm going to reverse. Look for buys. That's it. Okay, so that's why you care about your 5-minute bias and your 1-minute bias, because now is when you're going to start to enter in your trades and execute on your trades, right? Okay, so where could we have entered on this trade precisely, right? So we could have entered right on this level right here, right? Because we were waiting for price to just repeat that same exact indication and honestly go even further because we're wanting it to continue, right? So let's see what that would have looked like. So a short position, you would have entered right there, right? So this swing high right here, this is your stop loss. You have a 5-minute stop loss. Your stop loss is not on the 1-hour. It's not on 15. It's not on any of that. It's on the 5-minute. Why? If you enter on the 5-minute, your stop loss is on the 5-minute. Okay? That's it. So the previous swing high that gave you that indication, that's your stop loss. Because otherwise, it's going to just continue up and the trend wasn't reversing. The trend is actually continuing this bearish momentum right here. So if it passes this level right here, I'll mark it out just super quick. If price passes here, then we know that we're buying because this is bullish structure, that it's going to continue up, right? But it didn't do that. And so that's why we're putting our stop loss here, because if it does go above there, then it is going to do that. And our stop loss, if we have no stop loss above there, if we have no stop loss at this area, or if we have no stop loss here, then it's just going to keep going, and your stop loss is going to go until like forever. I mean, you're lost. You're going to be holding onto it until you think that it's going to reverse. It's reversing, but like it has to build bearish structure until it's going to reverse, and you don't know when that happens. You could get wiped out. You can get, your account blown or whatnot. So make sure you have your stop loss, and make sure that it's a small stop loss, and it's not like a 15-minute or 30-minute stop loss on like a 5-minute or a 1-minute entry. Like that just doesn't make sense, right? And so the same exact thing for your take profit, right? So you could aim for these lower, most recent 5-minute highs, 5-minute lows and all that. But, if the trend is going to continue, at least for that moment, and you're going to be watching your scalp, you're going to be on the computer just watching it the whole time that it plays out, then that's when you can be like, okay, my TP1 is right here, the 1-to-1, and then my TP number 2 is at this low right here, and then TP3, and you can just like trail your stop loss or trail your profits or whatever, take profits, whatever you're gonna do, until when? Until price breaks market structure, because that's going to tell you, okay, I'm done with my bearish trend. I'm going to go back bullish. So stop your sale, and you can start a buy, right? So that's why I don't really have a hard TP, because you want to follow the trend. Even though it's a micro trend, it could last 30 seconds, it could last 5 minutes, it could last, right here we've been bullish from 6:55 to 7:50, so it can last an hour. You just don't know. You want to watch it. If you're going to be scalping, you want to watch it, or set hella alerts. If that's the price, if you don't want to be watching it, set alerts. And who cares, your phone is going to be ringing like every minute, and I know that's happened to me before, and it's so annoying. But if you don't want to be on the computer, set your alerts, but you're going to have to pay the price, so it's going to be super annoying. But yeah, this could have been, let's see, we can still try to enter right here. So let's try to enter here, but right here, this could have been your entry, right? Right at this indication where price indicated to you in the very, 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 very beginning, I'm going to be bearish. That's when you knew, okay, once this indication is over and it corrects, and if it corrects all the way up to here, I'm going to enter right at that level. But even if it didn't go all the way up to there, or it went even all the way up to here, right? Let me just draw that out. If price even would have gone all the way up to here, and then it would have gone, why did I do that? And then it would have come back down to this level. Either way, your entry would have been right here, because you're still wanting for price to repeat that same exact move from this level to this level. If you want to think of it in like a super simple way, you're going from one line to another. So I don't know, maybe that makes it sound super dumb and simple and just really delusional, that you can just be like, oh, I'm gonna go from this line to that line. It sounds a little unresearched, or I don't know, it sounds like it sounds less technical than this fair value gap and this inverse and this order block and this blah blah blah, and it's it sounds less technical. But just because it sounds simpler doesn't mean that it doesn't work, or that you don't know what you're talking about, or you don't know what price is doing or anything. Because at the end of the day, ICC is you're trading market structure. You're trading price action. And anybody else in the world is doing some sort of price action trading, market structure trading. They're just doing it in a fancier way that makes them feel smarter sometimes, I think. I don't know. It doesn't have to be super hard. I think this is the simplest way to do it, going from line to line, because that is basically what you're doing. You're going from, okay, price went from here, let me enter here, let me put a TP here, and then, oh, guess what happened? It hit. But guess what? It went even lower, and it created another low, and then it went and corrected all the way up to what level? This level, where that indication came from. Because now we're just repeating the same thing, right? ICC just repeats. So right here, tiny, tiny, tiny indication all the way down to this level, right? Let's delete this. Let's delete this real quick. So price, tiny indication all the way down to this level right here. So right here, this is the same exact thing. Price had a break right here, and we're still on the 5-minute. Price made a tiny break right there, corrected all the way up to that same exact level. Could have gone higher, but as soon as it went back to this level, you could have entered right there. If you missed that first move, we could have entered right there, right? Short. Entered right here, stop loss above this level, and you notice it's the level that we marked out. Why? Because if it goes above here, we know that it has potential to go all the way up here. We don't want price, or we don't want to, as scalpers, we don't want such a wide stop loss. You can have that stop loss above there and then wait for price to continue down and break and continue that bearish structure. But that'll either take a lot longer, because now you're following like higher time frame stuff, and like the higher the time frame, the longer it's going to take to execute. So if you have, a short stop loss, a short take profit, then the more likely that your targets are going to hit, rather than making it a super long stop loss and a super long take profit, and then you're just waiting, same thing, all day for your price to hit or your targets to hit. And like, what was the point of scalping if you just waited all day for your targets to hit? That's not the point of scalping. The point of scalping is you're there for, I don't know, in my personal opinion, for like less than 2 hours total, doing like your analysis, your top down, your everything, and your trading. And you should have one, maybe two really good trades, and you should get out. You should enjoy the rest of the day, right? That's the point of scalping to me, until you're able to find that that setup Monday or Tuesday, and then hold it the whole entire week. That's going to be the goal eventually, but not right now. So, like I said, TP, take a soft TP. You know that you're going to be aiming for right here. So this was our TP, right? So when this was our entry, this was our take profit. Why? Because we knew that price did that already. So we hit right here, when price went all the way back up to here, this was our take profit, right? And that gives you like a really bad risk to ratio, but you're how do I explain it? Your target is gonna hit. So you basically had no drawdown right here. Like, let's even look at the candles. If you would have entered right here, immediately exited right here, it would have hit. Or like you could have even held soft TP right there and held it. You could have held it for a lot longer and gotten yourself a better risk to reward. but it had 0 drawdown. Like, that's what you guys don't understand. Like, yes, the risk to reward when you're scalping, okay, scalping, the risk to reward on the right here, this little tool may not look as best, may not look nice, but you have basically 0 risk because you had 0 drawdown. So this number doesn't even matter. This, in my opinion, this 0.66 doesn't even matter because you had no drawdown. So let's put that like that. And let's say you entered from here to here. What is this already? This is it doesn't even say, it's a point, it's like a 21. A 0 to 21. I don't know, like, maybe that doesn't make sense. Probably doesn't make sense. But you're entering, there's no drawdown, and you're getting your profit, your take profit hit. So I don't really care, in my opinion, about the risk to reward yet, because I'm scalping. I'm trying to get what I can get. You know, I'm trying to get a bag. And then I'm trying to go, okay, until I can continue to build up my capital, continue to be able to swing trade. And that's when I'll be like, okay, my risk to reward is, I'm not going to risk fucking $20,000 to make $10,000. You know what I mean? That's not going to make sense once I'm using higher numbers. But right now, guys, we're just trying to build up that capital, okay? We're just trying to survive, okay? Trying to pass evals, or trying to pass whatever. This is what we're doing right now, okay? So where could you have also targeted besides this level right here? Because we don't know what's below this level. We don't know where price has gone or where price has the potential to go, right? So what do we do when we don't know where price is going to go to the right? You look left, right? Look to the left. So look to the left side at your most recent low. So if this is right here, our most recent low, then we would have even targeted that one. And we would have felt a lot more comfortable with this risk to reward, right? A 1.3. Even though it's not like super, oh my God, what, blah, 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 blah. Guys, you got a 1.3 with 0 drawdown. And your target was hit. Like, what more? I don't know. Stop looking at numbers. Stop looking at P&L and R&R. Stop looking at all of that. Start looking at your fucking, does your strategy work? Are you entering correctly? Are you exiting correct? Are your stop losses getting hit, or are your take profits getting hit? That's what you want to focus on. Not, oh my God, this trade got me $500, or that one made me $700, or whatever. Like, that one was a 3R. I'm like, but how long? Like, but okay, but how much did you lose to get to there? How many trades did you do before your 3R to get to that 3R? You know what I mean? Like, this one, I entered, my take profit hit, I had no drawdown, and I'm out for the day. You know what I mean? And I don't care about my P&L or any of that. I care, damn, my strategy works. My TPs keep getting hit. You know what I mean? Like, start looking at things differently, because if you let money control you, if you let numbers control you, if you let approval from fucking posting your shit or flexing a fucking band or whatever, like, that's gonna get you nowhere. You might as well put it down. Put that shit down right now. Go back to work, because that shit is not gonna work for you. Anyway, right here, we're back at this level. So let's try to get an entry, right? So, all right. So we're going to want to enter somewhere right here, right? So when price gets to this level, we're going to want to sell. And so let's go back to where candle, and then we can see that price starts to make, oh, we can sell. Damn, I wasn't even connected. Okay, we know that price, let's do, yeah, 2. Once price gets back to this level, we can sell. So let's enter. Fuck it. Damn it. Why did it enter me like that? Okay, this would have been our entry. So let's just do that. So let's just mark it out as we should have, because this should have been, guys, our entry. We got in a little late. And then right here, where is our, yeah, this is going to be our stop loss. And then this is going to be our, where are we at? You know what? This may be not a good trade. Anyway, where was I? Okay, anyway, all we can do now is just wait. But yeah, so price right here is creating bearish market structure, right? And then right here, this would have been our most recent, what is this level? What did I mark out? Oh yeah, okay. So price under this level is going to sell to this level. So honestly, we did get really late into this trade. Our entry should have been all the way up here. And this would have been our stop loss. And then right here, this would have been our target, right? So we're hella late to the trade. We're all the way down here. All the way fucking down there, right? So this is going to be a losing trade for us. We could just tell, right? Unless price can come all the way back down to this level right here and continue that bearish structure. So let's wait and see what price is going to do. So right here, we want to see price continue to break that bearish structure. So this is why it's so important to only be on the charts if you're scalping for literally how long? 2 hours? From 6:55 to 8:15. Like, you're not gonna be on here all day. Like, this is gonna be maybe, like, if this trend reverses right here and we start breaking this high right here, like, this is what we don't want to see right now for this trend. We don't want it to break above this stop loss right here. We don't want it to break above this swing, because we know that this has the potential to go all the way over here and the potential to go all the way up here. And so we just don't want it to build that bullish structure. So if that's what happens, then that's what happens. But we're definitely hella fucking late to this trend. I mean, to this, what's it called? To this, what's it called? To this trade. So I don't know. Should we let it run? Should we close it out? Anyway, yeah, because did you see? Okay, yeah, do you see how now price is creating? Okay, yeah, let's close out of it. Should we? The reason I don't care, guys, is this is fake. So let's put it there and see if, obviously, it would have taken us out, because this is not a trend to hold. I'm telling you guys, you're not going to hold your scalps. You're not going to hold them. You're going to be in them for a few, like an hour max. See? This is for like an hour, from 7 to 8. And now we're starting to fail to create these lower lows. So this is the perfect video of us losing. This is the perfect video, because right here we can start to see that now price is creating, or it's failing to create these lower lows, right? It's failing to create them. It tested them. It went and wicked there. And we see that we had a wick here. And this is why we don't trade the indication. Guys, this is the perfect video because this was the perfect fake out video on how to avoid getting faked out, right? Because regardless of this being bearish structure, right? This is still an indication, and you don't trade indication, right? And what did we do? We entered on the indication. Yes, it could have been continuation. Yes, it could have. But it didn't. It didn't. Why? Because it's just the end of the trend. That's it. There's no big reason or magical reason on damn, like as soon as I entered, price reversed on me. Like yeah, it did. We saw it happen right now. It did. Why? Because the trend is over. That's it. Not some magical reason. Not because the trend hates you. Not because the markets want your money. We could exit right now, but I want the stop loss to hit because I want to prove that hey, this trend is over. Okay, and sometimes it just happens. Like if you're too late, you're too late. You're gonna lose. Sometimes you just are gonna lose. But right here, where could we have put like an even tighter stop loss? Okay, let's enter on the 1 minute, right? We saw how to enter on the 5 minute. Right here, we had multiple entries right here on the 5 minute. So there was an entry, right? Stop loss above here. TP there. TP number 1 right there, right? And then you let it run to see what else it does. Because you want to just follow, as even if you're scalping, you want to follow the trend for as long as you can. That's why I can't tell you, oh, put your stop loss, your take profit exactly at 1 to 3, or right like this, or exactly at this level, or exactly there. Like, you can aim on the for your lows to the left. Remember, looking to the left, but those are still not just guaranteed to hit. You just have to watch it because you don't know when you're scalping how long that little tiny microscopic trend is going to last for. On the daily time frame, on the higher time frames, 1 hour, 4 hour, you know they're going to take longer and you're going to hold those trades longer. But on the 5 minute and the 1 minute, you don't really know. So just sit at your computer and watch it. Or if you're not going to sit at your computer, set your alerts, but it's going to be super annoying. So this would have been your take profit 1. And then, okay, if I don't know, oh my bad, if I don't know where price is going to go after that, I'm going to look left. Oh, right here, I can see that price made a low right here, so I'm going to target that. Maybe price doesn't hit there, maybe it does. Oh shit. And see, like, we're about to hit our stop loss. So where is this? I wish I could move this. But we know that we're going to target it right there, right? This low right here is the lower that we're going to target. Maybe it hits it, maybe it doesn't. That's why we're going to be monitoring our trade, our scalp. You know, this is scalping is a completely different ball game from what Sci does. He swing trades, we don't do that yet. Okay? So just keep that in mind. He enters a trade Monday, probably Tuesday, lets it roll. He knows what the 4 hour, the daily is doing. He doesn't care about the 1 minute or the 5 minute because he's not trading that. He's holding that to get the entirety of the trend on the daily and the 4 hour. We're not doing that. We're doing that on the 5 minute and on the 1 minute. So it's a completely different ball game. So right here, there you go. Trend is over. Trend is not wanting to go any lower than this, right? And so right here, we're indicating, oh, we're going to go. We're buying. So what should we do? Should we buy? Let's wait till price gets down at this level, if it gets down at this level. But Okay, look, uh, uh, let's do it. Okay, price came in right there. Price always gets this fucking, oh, that's annoying. It like messes it up just a little bit. So let's take that logic, right? Of price is gonna go from level to level. So if price is gonna buy up here, we know that it at least has the potential to buy all the way up to this level, right? Up to the next level of sellers. So, oh shit. So if we buy here, then price has the potential to go all the way up to here. So that's where our take profit, our TP1 is going to be, right? We could let it run. We could set an alert here. So if you really wanted to do it like that, you could just add an alert here, enter here. Your stop loss, where would it have been? Stop loss is right here. At this level, because you know that if it's under this level, then it's just going to sell. And you don't want to be in a trade where you're losing and losing and losing, hoping that it comes back. Just take your loss and go. That's why, you know, you have to like demo trade this shit for like the longest time. And honestly, I wouldn't even do a hard stop either. I would do an alert, because I hate sometimes like price hits your stop loss, then it goes right back to your TP. And I'm like, if I would have just added an alert, I would have kept my money and I would have made some more. But that's a lesson that you learn later in life. Not later in life. That's a lesson that you learn the hard way. Literally, just the hard way. But right now we're scalping, right? So we're dealing with this. We're dealing with this drawdown. Obviously, if we really, really, really wanted our stop loss to be down here, we could put it down there. And would it have hit? Ooh, I don't know, guys. This is all just theory to me. Did you know that? No, I'm just kidding. It's not theory, but I'm just applying what they're saying, and I'm just taking it on a shorter time frame. So this is the 5 minute. I should have entered off the 1 minute to show you exactly how I do it. Exactly. But we can still honestly see, because at this level I still would have entered. There's no reason why I wouldn't have entered anyway, because my 5 minute levels, those are my targets for my 1 minute, right? So let's see what the 1 minute is doing. Right here, this is the lowest low the most recent low that we made. So below it, we know that we have potential to just sell. And we don't want to be in that if we're going to be selling, right? Or if we're going to be buying. We don't want price to be all the way down there. So we honestly want price on the 1 minute time frame to be breaking this tiny little microscopic little high, right? And so let's take this color and let's turn 1 minute time frame into yellow so you can see it, right? And so that is going to be the high that we want to break to continue to see this bullish momentum. And this is the low that we're going to have to break to continue that bearish momentum. Because why? We're taking this same exact logic and now we're applying it to the 1 minute time frame. Because it's the same thing, you know, on the 1 minute, price isn't going to break if it is going to continue. It's just going to continue. And so right here, what did price do? It had the lowest level right here. This was our 5 minute candle body close, right? And so below it, we had this wick. This wick is created out of these candles. And so this is the lowest level that we had on the 1 minute time frame, right? So if you really wanted to mark that out on the 1 minute time frame, that's the lowest place that we've been. This is the 5 minute body candle close, but we can do the same exact thing, and it's the same, right? So we have a 1 minute close, 1 minute. This is the lowest point right here on our 1 minute time frame. And then what did price do? It broke this 5 minute swing high and it sold, it bought all the way up from here, right? And so it went down here, and then it created a higher low, exactly what we want to see on bullish structure, but then it failed to create that higher high. And so what did it do instead? It broke market structure because it's reversing. So we had a tiny little microscopic bearish trend right here. And so below this level right here, this is this 1 minute low right here. If you notice, it's the same exact as a 5-minute low right there. So we had a swing low. Yeah, we had a swing low that's broken, and it had a bearish indication, right? And so right here, we're selling. So even though this is exactly why we put our stop loss right there, because if we are at this level on the 1 minute time frame, we're gonna sell, because we've seen it before multiple times, 1, 2, 3 times. So if we're below it here again, we're gonna sell. So we want to get out of the trade before we lose more and more and more money, right? Because we're hoping, or not hoping, we're thinking, or we analyze that price is going to be long. So right here, price was bearish all the way down to this level. Again, this 5-minute level. This blue line, remember, is a 5-minute level, right? And so what did price do? It bought all the way up to here, and it refused to break this 1 minute low. Remember, we're treating the 1 minute time frame like it's the daily time frame, because we already did our due diligence with analyzing the 1 hour, the 4 hour, the daily, and all that. So now we have the ability to do the same exact thing to the 5 minute and the 1 minute. So price wouldn't be creating a higher high right here and a higher low right here. So let's mark this out. It created a higher high and a higher low, and it wouldn't be doing that unless price is breaking structure and reversing, right? Unless the market is the tiny little microscopic trend on the 1 minute time frame is reversing, right? Because there's reversals on the 5 minute, 1 minute, 1 hour. There's all kinds of ICC concepts on every single time frame, right? And so you want to be able to catch those tiny little trades. So right here, we have to beat this 1 minute high, right? And so far we haven't, and that's why I entered on the 5 minute. I don't like entering on the 5 minute, to be honest. The 1 minute is like your sniper entry. Like that's gonna be, it's gonna be a lot more noise, but once you understand how to read market structure, how to read price action, and understand this video over and over, and size videos over and over, and you can understand that on a microscopic level and apply it to the lower time frames, it's so much easier to understand what price is doing. But anyway, right here, this is the 1 minute high that we need to break, right, to continue bullish. So I should have entered at the top of this at the top of this candle right here, because that would have been your continuation, right? Because this high corrected, and then it continued to make bullish structure, and then above it continued. And you know that this is the level that we're targeting, because on the 1 minute, the levels that you target are your 5 minute levels. And on your 5 minute levels, on your 5 minute time frame, the levels you target are your 15 levels. And so on, you know? So that's why if you're entering on the 5 minute, you need to be using on the 15 minute, because those are going to be like the levels that you're going to be aiming for if you want like a little bit longer trend, or if you want those better risk to rewards, how we were seeing that it's like a tiny 0.6. If you zoom out and you aim for those 15-minute levels, then it'll be the risk to reward will make a lot more sense, just like statistic wise. But yeah, if you're going to be entering on the 1 minute, like how we just did, you're going to be targeting those 5-minute levels. So right here, the reason why we entered, honestly, we entered incorrectly, guys. We entered incorrectly. Well, no, we did not enter incorrectly. This would have just been extra confirmation if you didn't get in at this level right here on the 5-minute time frame. If you were not able to enter at that tiny little break, then this 1 minute break right here, this level right here, you could have still entered and aimed for that 5-minute level. And look how we are doing that exact same thing, right? So price went all the way up to here, went down to that 5-minute level, did not pass that lowest low that the 1 minute created. Instead, it continued to build higher lows, higher highs, and higher lows, a higher high and a higher low, equal high, equal low, and then it broke. We broke to the upside. And so we're trying to get again that higher high, and if it creates a higher low, then that's fine. But we still want to see that higher high towards this level right here, towards our take profit, right? And so that's all we're waiting for on the 1 minute. So let's mark it out like this. And so our entry right here on the 5-minute, because we were here early, we were here to see, the trend was over down here, right? We tried to enter down here to catch a short, and we weren't able to because the trend was over. And that's what's gonna happen when you're scalping. You're gonna have trends that are over within an hour, because this trend only lasted like an hour, and you're gonna have trends that are lasting only 5 minutes, because look at right here, from 7:55 to 8:03, bullish until 8:06. So that was like a 10-minute trade, honestly, a little more, a little less than that. And so you would have been bearish again from, anyway, you see the point. So you have to be here. If you're scalping, you have to be here. You have to see what price is doing. You have to monitor it. And so if you're on your 1 minute, then your targets are your 5 minutes. That's it. And so right here, our stop loss is not this big. Our stop loss is down here at this tiny little, we're going to give it room to breathe, because why not? But essentially anything below this level is going to sell. So that's where our stop loss is going to be, right? On the 1 minute time frame. So we're on the 1 minute time frame, and that's going to be like our stop loss. So far we've identified our entry, our take profit, and our stop loss. And you basically just, you let it ride. Your take profit is either gonna hit, or your stop loss is either gonna hit. And look, what drawdown did we have when we entered our trade, right? When did we enter? Obviously, oh yeah, we did have drawdown. But if you would have even entered right here and you were like, oh, this is, I'm gonna wait until this level up here is broken, which we didn't do, because remember, we messed up. We entered off that 5 minute time frame, because I was showing you guys that 5 minute time frame. But if you're gonna enter off that 5 minute time frame, remember, your levels are your 15. Okay, your take profits are your 15 minutes. Your stop loss or your you already know exactly what we just said right here. Apply the same exact logic, but to whatever time frame you're gonna be on. Okay, because that's what we're doing. We're taking higher time frame logic and applying it to the lower time frames, and we're just doing it at a tiny microscopic level, and we're doing it super quick, and we're not getting millions and millions of dollars. We're getting a few hundred. We're passing evals like this, where we're compounding fucking profits like this. And so this is, you know, slow and steady wins the race. Eventually we'll be able to scalp, but this is essentially how we can scalp, right? So we entered off this 5 minute, again, for those of us confused. We entered off of this 5 minute level, because we know that at this 5 minute level, price buys. So let me say that again. Above this level, price buys. So it goes all the way up to this level. So this is going to be our take profit, because we're going to be doing the level to level mentality, right? Level to level thinking. This 5 minute level is going to take me to this 5 minute level. You can only be either on the top of the level or below the level. You can't be in between. You can't be like, you know what I mean? You're either a buyer or a seller. You're on top of the level or below the level, right? And so right here, price is still trying to get to that 5 minute high. I wish I could have, let me delete the alert, because I'm not going to hold it for the sake of the video. I'm just going to hopefully let the profit hit. But why can't I delete this? But yeah, now we're just waiting for either our stop loss or our take profit to hit. And everyone's different, you know. If you start to get nervous, you know, take your money and go. If you don't want to wait and you don't want to really be on your computer, take your money and go. Like, who cares? Take your money. It's your money. But yeah, for the sake of the video, let's try to see if price is gonna hit our TP. Hopefully it does. Why can't I? Okay, let me move this really quick so I can expand this. Because this is our 5 minute level, guys, remember? So anything below it is going to be bearish, it's going to sell, and anything above it, it's going to buy. And so that's a decision level that we're at, or that we're aiming for, because we want price to decide what it's going to do, but we're aiming for that level. And we're just waiting to see if price is going to hit. And so, yeah, if you realize, like, our entry is a level, our take profit is a level, our stop loss is a level, right? They're all just levels. And I don't know what else to tell you guys, but like right here, I don't know, price may hit our take profit, it may not, but we are above this 1 minute level, and that just means that above that level, price is bullish, right? And oh, who knows? Oh, 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 oh. And price, I don't know, like, you could either exit now because it's so close, you could either wait, say F it. For the sake of the video, we're setting a hard stop. If you wanted to trail your stop loss, that's where you would have trailed it to. You would have trailed your stop loss to this level right here, where price made that indication, and you would have had a risk-free trade. So this right here is a risk-free trade, right? And for the sake of the video, we add a hard stop, but in real life, you could have added an alert right here like we had. So we had an alert right here, right? And that would have been TP1. And then you zoom out on your 5 minute and you see, oh, there you go, guys. There you go. See? And so this would have been your next target right here, because that's your next 5 minute high, right? And this would have been TP2. So we could have even written that down. TP1. Shit. TP1, and then right here, this one would have been your TP2. You would have held to see if it would have hit. If it doesn't, you know, your TP1 is hit, and then whatever you get above it is just extra, so be grateful for it, you know. So yeah, that's how you would have scalped your 1 minute using your 1 minute, using 5 minute levels to use your TPs and your stop loss. And you see, okay, listen, you see how this is a 2-to-1 because we're not using our we're using the time frame above it as our stop loss. And yes, I think I said whatever TP you're on, the level of the time frame you're on is where your TPs and all that gotta be. Yeah, that I explained that like I misspoke. I meant like the trend, the time frame above where you're at is where your levels are gonna be, only because you want space to breathe. But if you notice, like this level, I mean this entry right here, once we had that um, once we have that indication, right? So this wick, we're counting it as an indication. Why? Because we're on the lowest time frame that we can be on, and we're not going to zoom in to the 30-second, the whatever, to see what that tiny little wick is made out of. So we're going to use that candle body close as market structure, right? And so we're going to use this wick as an indication. So this is another indication. So we know that price above that level buys, okay? And so we know the same exact thing for the 5 minute, because price above that level buys. So even if we entered right here, we're exactly where we did on that 5 minute level. I speak French now, you know. But yeah, price, if we entered right here, then right here we have a 1-to-2, because we're aiming now at this 5 minute level. That's our stop loss, because we want room to breathe. This is our entry, because we want that bigger push, because when you're on a lower time frame, the time frame above it has more power. So your 1 minute levels are going to have less reaction and less power than your 5 minute levels. So if you can enter, if you're on your chart and your price is nearing the 5 minute level like it was for us, and you can enter off there, that's even better. That's an even more precise entry. But if you want to be a little bit more conservative, a little bit more cautious, then use that 1 minute break, because you know that that's your safer entry. It's not going to have such a big, let's see what the difference it makes. So instead of it being a 1-to-2, right, it turns it into a 1.5 or 1.6 or whatever. And it's just, I don't know, psychologically, you guys care about that risk to reward stuff, and you would have aimed for that, whatever. You know, you guys care about that too much. Stop caring about that. Just start caring about whether your take profits or your stop losses are hitting. Because if your stop losses are hitting more than your take profit, you're focusing on the wrong thing. You need to be focusing on the strategy. You need to be focusing on whether or not you're getting your entries correctly. And so watch this video over and over and over, and let me just write the most important things down that you guys honestly, what helps me the most, you know. So if you're on the 1 minute, then aim for 5 minute TP and stop loss, and repeat that same logic for every time frame you're on, right? So if you're on the 15 minute, so 5 minute entry, 15 minute TP and SL. And 15-minute entry equals, actually let's do equals a 1 hour TP and SL, right? So these are just, I love formulas. I don't know. I love being able to see facts and everything and plug things in. And this is just like, this is me creating a formula, I guess, in my brain. But yeah, and vice versa. And we know that this is true because this 15-minute entry, 1 hour TP stop loss, who uses that? Sci uses that. Okay, so we're not pulling this out of our ass. We're not just randomly like, oh yeah, like yeah, if I use the 15-minute, like no, we're taking what ICC is, and we're taking the strategy and applying it microscopically. And so that's why we know it works. We just saw it work. We saw the end of a trend. We saw our take profit, our stop loss get hit because that was the end of the trend. We saw that we entered way too late. That if you're scalping, you have to be on it and you have to be at the top of the bearish if you're going to want to hold it all the way down. But if you're going to be entering at the middle, then you got to be more cautious because you don't know when that trend is going to end. And you can, yes, zoom out and see where our levels and our on your, if you're 1 minute, you can see where the 5 minute, where it's going to like have reactions and everything. And right here we can see that there's reactions, you know. This, if we extend it, I'm sure that there was some sort of 5 minute reaction because this is a 5 minute level, right? So we can see above it buyers, below it sellers, above it buyers, below it sellers, above it a big push up because it was accumulating all this buying power and it pushed all the way up here. So this is why we know, oh, we could have looked left at this level to see that price was probably going to end its bearish trend here because it has a big push up here and it repeated that big push up here, and then it didn't create that lower low and it continued that bearish momentum. So that's how we can utilize just one time frame higher than what you're on. Those are the levels that you're going to be targeting, okay? And that's the same logic that Sci uses. We're just using it on the tiny time frames, okay? On the 5 minute and the 1 minute. And this logic, remember, you can't do anything or anything at all before you do your analysis on the daily and the 4 hour. If you're not going to do the daily, at least do the 4 hour. At least know what's going on the 4 hour time frame. And you're not marking these levels out. Like, watch, we haven't even hit any of these 4 hour levels. You see how long it would have taken for any of these levels to hit? Because the higher the time frame on, remember the white line is the 4 hour level. The higher the time frame on, the higher it is. I mean, the longer it is that it's going to take for our time frames, for our trades to execute. So right here, even though we're on the 1 minute time frame, even though, right, we can still know what's going on because we have those higher time frame levels marked out. This is a 4 hour time frame. This is a 4 hour level, and we're on the 1 minute time frame, right? So the reason why price went bullish in the first place was because price on the higher time frame did not want to go higher than this. It did not want to go higher than this. If we zoom in on the 4 hour time frame, it didn't want to go higher than that. And so it rejected, okay? Or you can say it corrected because all of this was bullish. All of it was bullish until it reached that 4 hour level on the 1 minute. On the 1 minute. See how all of this is connecting, okay? See how all of it's connecting. And do you see? Okay, let me pause. On the 1 minute, we went all the way up to the 4 hour. We rejected that 4 hour level. We were like, no, we do not want to go up. So what did we do? We were able to capitalize on some shorts. because it was a tiny little correction on the 4 hour. If we zoom out, this probably was a correction. Actually, let's go and check it out. Oh, yeah, yeah. Okay, here's our level, right? This is where price needed to break in order to continue that bullish momentum. In order to make it to that next 4 hour level, we had to get higher than this. And what did we do? We reached up to there, and then we haven't reached up to there. Basically, we haven't reached up to there, or we did, and then we rejected. And now this candle right here that just opened, it's trying to now make its way either up to here. And so when we're back at this level again, remember we're on the 4 hour, let's go back to the 1 minute. Once we try to make our way back up to there, right? So we made it on that first candle, the candle that was before it, that closed, that had that wick and rejected. This is the structure of it. This is what created it. This is why it formed that way. This. So it went all the way up to here, and it closed all the way down here, right? So this is basically what the wick is made out of. And we're just dissecting it with a microscope, right? Anyway, and so price rejected that 4 hour level. Now it's making its way back up to that 4 hour level again, right? Because we're passing our 5 minute levels and everything, and we made it from this level to this level, this level to this level, this level to this level. Now this level is trying to make its way up to this level. And then the next level that we're gonna hit is this 4 hour level. Is it going to do the same exact thing that it did right here? Is it going to reject? Right? Because it went all the way down. Or is it going to break right through and continue that overall bullish market structure that we were looking at on the 4 hour and on the daily time frame? You see, this is why even as a scalper, you have to understand what price is doing on the higher time frame, how you can capitalize on looking at one time frame higher than the one that you're currently on. If you're on the 5 minute, I think the reason why you guys are not winning or maybe not getting the risk to reward that you want is because you're setting your TPs and your SLs on the 5 minute also. Make sure you do that, but you can do that, but make sure, how do I say it? Make sure it correlates with a higher time frame level. Like this 1 minute level, I could have aimed for from here all the way to here, right? Because I'm on the 1 minute. I'm targeting 1 minute time frames. And I could have, and my stop loss and my TP would have hit. So at the end of the day, it was a good trade. But the risk to reward that you guys are so obsessed with is bad. It's a 0.8. So if you target just one level above that, your 5 minute, because you're on the 1 minute, go one above, it's 5 minute, and you target right here, then it's a 2.4. You know what I mean? And so, and it would have hit. You could have would have been a little bit more patience, but it hit because you already have, you did all your analysis. Anyway, my brain is fried. My brain is fried from explaining this. I don't even know how long this video is, but you should be able to at least understand how to find your trend on your daily time frame and on your 4 hour time frame, right? You should now be able to understand why that's important. Why knowing what trend you're on so that you know what trend you're not, right? You know that if you're on a bearish market, in a bullish market overall, this bearish leg right here was just a tiny little correction that you could capitalize on quickly. It's not something that you're going to hold because the trend is now reversing. You're just on the 1 minute. The 1 minute is not going to cause a whole trend reversal. The daily time frame and the 4-hour time frame are going to cause trend reversals, not the 1 minute and not the 5 minute. Okay, so that's why you have to be on the computer watching your scalps. And so now you know how to find your trend. Now you know how to know what part of the trend you're on, so that you know that, like we said, it all correlates. Knowing what part of the trend you're on, so that you know what you're not on. Knowing what part of the wait, did I say that correctly? Knowing what the trend is, so that you also know what the trend isn't, and so that you know what you have to watch out for, right? And then also how that ties into knowing what part of the trend you're on, so that you also know what part of the trend you're not. So let me explain really quick how that makes sense. Really, on this example, we were on a bullish market. We were on a bullish trend. We capitalized. What is it? We saw that price right here. Okay, price was on a bullish trend. We saw that price started making bearish market structure. We know that that is not a trend reversal. That's a correction, because we're on a 1 minute. If we started seeing bearish market structure on the 4-hour and on the daily, then okay, I'm paying attention. But this, I'm just scalping, so I know that I'm gonna look for a short. Okay, and so here we were able, we were late to the trend, so we lost out on here because we entered all the way down here thinking it was gonna continue, but we didn't. We made a mistake. Remember, we entered off that 5 minute. So don't enter off that 5 minute if you're going to be monitoring and targeting 5 minute. Okay? That was our first mistake. We entered off that 5 minute. If we entered off that 5 minute, then we would have targeted a 15-minute high or low. And we didn't do that. So that's why we lost again. So the reason why we won this trade right here was because we followed our rules. We entered on the 1 minute. We targeted our 5 minute high or low, which was this 5 minute high. Targeted a 5 minute low as our stop loss. We followed all our rules. That's why our TP hit. Okay, so we're not making any of this up. We're fucking check those. That's our dog, y'all. Anyway, yeah, I don't know like how much more into detail I can get, but this is basically a masterclass, a look inside my brain. Damn, that dog is thirsty. This is a look inside the way that I would have done it if I was in the morning and doing this. And guys, this was us. This was one trade, right? We could have capitalized from all of this bearish trend, but we were late to it because I was explaining. We were explaining it to you guys, and you could have gotten 2, 3 pretty good trades and been done with your day. You probably could have caught just this one tiny trade and gone on with your day, because you're trading 5 accounts or 10 accounts or whatever the hell. And this account or this trade made us what? Let's go back. It made us, on a paper trade, I'm down bad, $600, and over 5 accounts, that's $3,000. That's a $3,000 day. And when did we enter? We entered like right here, a little too early, 8:23, and then by 8:39, you're $3,000 richer, or $600 richer if you're only doing one account. Whatever. Like, that's just the power of guys. This is so cool. I don't know. Anyway, like I said, this was a master. I'm not gonna edit any of this. This is just everything put into here. Watch this over and over and over. I'm going to be continuing to tweak my strategy, see what works, and continue to do more and more of these videos, breakdown videos. But so far, this is how I've been scalping. I'm just going to be getting better at my strategy, and I'm going to be sharing more of those videos. But for now, this is exactly how I've been doing it. And yeah, hopefully it helped you guys. But, stop the video in the beginning and you'll basically understand ICC. The further you get into it, the more you learn how to scalp. But I feel like you guys should be able to get the idea of it, or at least right now, because this was definitely just a masterclass and a deep dive inside my brain. And hopefully it helps y'all. Hopefully it mofo helps.